If an Uber or Lyft driver hits you, most people assume the same thing. Uber's insurance covers me, so I'm fine. I want to stop you right there because that assumption can cost you tens of thousands of dollars. There isn't one Uber insurance policy. There are three, and which one applies depends on something most people never think to check. I'm Mason Rashtian, and before I represented injured people, I spent years on the defense side. Today, I'm breaking down exactly how rideshare insurance really works in California and what Uber and Lyft are not going to explain to you after a crash. California law splits every rideshare accident into 3 periods based on what the driver's app is doing the moment the crash happens. Period 1, the app is off. The driver isn't logged on and there's just a regular person driving their own vehicle. That means only their personal auto policy applies. And here's the catch. A lot of personal policies specifically exclude rideshare or commercial use, so this can turn into a real coverage gap. Period 2. The app is on, and the driver is waiting for a match. The driver is logged on, available, but hasn't picked anyone up yet. California requires Uber and Lyft to provide contingent coverage here, but it's much lower than people expect. We're talking around $50,000 per person, $100,000 per accident for injuries. If you've gotten into a serious injury, that limit can disappear fast. Period 3. En route or during a trip. This means the driver has accepted a ride and they're on the way to pick somebody up, or a passenger is already in the vehicle. This is where the big number kicks in, up to $1 million in coverage. This is a tier everybody assumes applies in every single accident. It doesn't. Same company, same driver, potentially 3 different insurance outcomes. Here's a quick but important point. Uber and Lyft didn't build their tiered system out of the goodness of their hearts. This came from California's legislation and the California Public Utilities Commission after regulators realized personal auto insurance was never built for someone driving strangers around for money. So the companies comply with the letter of the law, but nobody's requiring them to make sure this is easy to understand after you've been in a crash. That part's on you and on whoever you hire. Let me walk you through a scenario I see a lot. A Lyft driver just dropped off a passenger, closes the app, and heads home for the night. On the way, they run a red light and hit a pedestrian in the crosswalk. The app is off, so Lyft's insurance likely doesn't apply at that. That pedestrian is now relying entirely on the driver's personal policy, which might have limits nowhere near enough to cover a serious injury. Now change one detail. The driver hadn't logged off yet, technically still available for a match. Suddenly we're in that $50,000, $100,000 tier. Change it again. Driver had just accepted a ride request, on the way to pick up when the accident happens. Now the $1 million policy applies. Same intersection, same type of crash, 3 totally different outcomes, and the only thing that changed was the status on the app most people never ever think to check. That's why pulling the trip data matters so much and why it needs to happen fast before it can be disputed or lost. So here's what I saw doing defense work and what I still see today. The adjuster, whether it's the rideshare company's insurer or the driver's personal carrier, knows exactly which period applies before you do. A few things I see happen over and over. They'll dispute which period applies if it's ambiguous and argue whichever version gets them the lower payout. Personal insurers will often point you away entirely, citing a rideshare exclusion, hoping you give up before you ever get to the company's policy. They'll slow walk the trip data request because without pressure, there's no rush for them to hand over the records that prove which tier applies. And they'll come in early with a lowball number before you have any idea what you're actually entitled to. None of that is necessarily illegal. It's just what happens when nobody's pushing back on your behalf. So here's what to actually do if this happens to you. First, get medical attention immediately, even if you feel okay. Adrenaline hides injuries, and a treatment gap becomes ammunition for the insurance company. Second, screenshot the trip details in the gap right away. This includes driver information, timestamps, and the route. That data doesn't stay available forever. Third, do not give a recorded statement to any insurance company before talking to an attorney. What you say early gets used against you later on. Fourth, report the accident through the app's built-in safety reporting feature. That creates a documented record tied to the specific trip. And 5, do not accept a settlement before getting legal advice. Nobody on the other side is going to volunteer that a higher coverage tier may apply. Rideshare accidents look simple from the outside. An Uber driver hits me, so Uber covers me. It's not that simple, and the coverage structure underneath was built to protect the rideshare company's liability, not your recovery. If you've been hurt in an accident involving an Uber, Lyft, or any other rideshare vehicle anywhere in Santa Clarita, Los Angeles, Ventura, or Kern County, reach out. I'll review what happened and help you understand exactly what coverage should actually be on the table. My name is Mason Rashtian, and we meet our clients by accident.